Thank you very much. Welcome, everybody. Very excited to have this session with Benavest as we inch closer to open enrollment. We are going to present a fantastic opportunity for brokers where we are seeing um, more and more success um, with this particular concept that we're going to talk about today. So, this isn't really geared to be a product training, this is more a conceptual discussion about a growing need that we're seeing in the individual market year after year. Again, my name is Jerry Wagner. I'm joined today with Bobby Joe Massey. We work together on our broker account management team. Bobby Joe is going to be taking a portion of the presentation. Bobby Joe, can you hear me?
I can. Can you hear me, Jerry?
Yep, very good.
Perfect. Thank you.
Today, what we want to cover with you is a concept called first things first. And what first things first means is dealing with out of pocket costs that are created by a person's individual health plan. This is a great opportunity for those that do a fair amount of ACA business. And I'm going to elaborate a little bit more in a bit. What we'll do first is focus on the need for this. And if you don't start capitalizing on this, you will lose clients because other brokers are starting to see the need and capitalize, and at the same time adding to their income. We're going to talk about how you do this, and then Bobby Joe is going to present the solutions on how you actually do this. Let's talk about the need first of all. So I mentioned out of pocket. This is a plan grid of our own United Healthcare ACA metallic level plans for plan year 2024. If any of you sat through any of our webinars regarding our ACA plan rollouts, you've probably have seen this. Also, if you haven't, I would highly recommend that you get into Jarvis, which is the broker portal for ACA, and start to look at all the different marketing tools we have for you out there, as well as the state specific plan grids. All of those are going to be accessible in your Jarvis back office. What we've done on this particular plan grid across our metal levels, bronze, silver, and gold, in our plan families, our virtual first plan, value advantage, in our new copay focus plan, which is new for plan year 2024, is we have boxed in red the maximum out of pocket that your particular consumer client is going to have to deal with for plan year 24. The maximum out of pocket has increased from $9,100 to $9,450 in most situations. So no matter what metal level plan your consumer is looking at, and I realize that bronze $0 um, premium plans have become extremely popular, unless it's for $1 preventive care, your consumer potentially has the overwhelming, in many cases, burden of a very, very high maximum out of pocket. That's what we're here to talk about today. And we're here to talk about first things first. Instead of just going out and taking someone's adjusted gross income and putting it into .gov or Health Sherpa or whatever EDE platform you might use, and coming up with the first carrier or first or second carriers that come up on those particular pages, enrolling your client and moving on to your next client, you are actually not doing them full justice in discussing that out of pocket that health plan is creating. So when we talk about first things first, I work with agencies on a weekly basis talking about this concept. And the concept is addressing the out of pocket up front. First of all, you have to address it, but addressing it up front. And we're going to talk about how we actually do that. To get into a discussion about some of the other stats that go along with this and um, different ideas that really expose the need. We already talked about that $1 that might not be covered by the base ACA medical plan. Out-of-pocket costs over the last 10 years have increased over 40%, and we're projecting over the next 10 years. So by plan year 2034, they're going to rise another 80%. That's 120% over a 20-year span. So brokers that fail to capitalize on this ultimately are not doing their clients justice, and eventually you will lose that client to someone else that actually is doing this. Other situations that occur might put somebody out of work. So not only are they going to be faced with a high out of pocket costs, they might be at a loss of income. I'm going to share a couple of different personal stories once we get to some stats on emergency room and critical illness type claims. Those are the big drivers of out of pocket. Your daily office visits and whatnot are fairly manageable, and a lot of it you can do with an ACA plan that has virtual care at zero or very low cost. I'm talking about big ticket items that are going to be a burden on your savings account. The other thing that's going to happen in talking about a more comprehensive benefit package is you're going to drive down your CPAs. That stands for cost per acquisition. There's a cost that goes into driving marketing to get that client in front of you. The lowest cost is building a sound referral network. That is the lowest cost of acquisition. Other means that brokers and agencies utilize might be radio advertising, billboard advertising, social media advertising, Facebook, obviously that's social media. Perhaps you're buying leads. Maybe you're involved in live transfer leads or shared leads. There's a cost to all that. That cost has risen over 200% in the last 5 years. And that staggering dollar amount on the other side of your screen in blue, boxed in blue, $5,300. That is the average median household savings, $5,300. That's barely half of the individual out of pocket, not to mention family out of pockets are in four figures. So the point to this is to start having people that traditionally, with the advent of guarantee issue type medical plans, not being more consultative in nature and simply being a transactional enroller. So the point of the session today is hopefully opening people's minds to taking better care of your consumer client and making more money at the same time. Don't take it from me, a carrier representative. Take it from people that have actually been polled and asked survey questions. This is a 2021 Kaiser Family Foundation poll where they went out and they asked consumers, would you find it very or somewhat difficult to afford these following categories? Now, granted, some of these may change in the year 2023. Maybe some of the ones in light blue, mortgage payments, gas, electricity, groceries, probably are going to pull a little bit higher because it's so inflationary in present day, which is even more important to protect people's household savings. But at the time of this poll, look at the number one response of what people would find very or somewhat difficult to afford. It's the out-of-pocket costs that have been created by their health plan. So again, don't take my word for this. Your consumer is having a difficult time affording the deductibles, the coinsurance, and the copays that come along with their plan. And quite frankly, many a times they're going to forego care because by now they've been in the AC environment long enough and they understand the cost that comes with that $1 coverage or lack thereof. This is a staggering statistic in my mind. We went out last year and we polled and surveyed our own 2023 ACA customers. And we asked a variety of questions. One of them was, at point of sale, did your agent discuss any other types of insurance with you? Look at that gray portion of the pie graph. 49%, nearly 50% said no. Folks, what this tells me is that there is a good amount of people simply transactionally enrolling someone in a health plan and not even discussing